Okay, let's dive right in. Welcome to this explainer. Today, we're going to unravel the hidden, honestly pretty complex world of financial crime and tax fraud. We're looking at an architecture of deception that fundamentally shapes global finance, yet, it's so often completely misunderstood. But by the end of our time together, you'll see exactly how illicit money moves, how it hides in plain sight, and how the frontline defenders of our system actually spot it.
So think about this. When does a simple tax error become a global financial crime? It's incredibly common to hear people talk about tax issues as if they're just, well, administrative headaches. A typo on a form or maybe a misplaced decimal point. But we really need to challenge that misconception right out of the gate. Authorities aren't hunting down innocent math errors. They're hunting down calculated, intentional criminal behavior.
Which brings us to Section 1, defining deliberate tax fraud, the line between error and crime.
Take a look at the precise language authorities use here. Words like deliberate, dishonest, deception, concealment. This isn't just about underpaying your taxes. According to major agencies like the IRS and HMRC, tax fraud is intentional wrongdoing. It is active, dishonest conduct aimed at basically stealing public funds or cheating the entire system.
Let's be real. It takes actual effort to commit tax fraud. It requires a person or a company to actively hide their income, or maybe intentionally inflate deductions using phony invoices, and it goes even deeper into some really complex territory. Like imagine a fraudster setting up a fake shell company in some remote jurisdiction just to conceal who actually owns a luxury yacht. That's what we call hiding beneficial ownership. Or deliberately keeping crypto wallets hidden from authorities. This isn't an oops moment. It takes meticulous, highly deceptive planning.
Let's move to Section 2, avoidance versus evasion, the crucial distinction.
Now on one side of the line, we have legal tax avoidance. The IRS actually explicitly states that structuring your finances to be tax efficient is a perfectly lawful means of reducing your tax liability. That's totally fine. But on the flip side, we have illegal tax evasion. This is the absolutely unlawful act of not reporting income or providing flat-out false information. So the former is just smart accounting, right? But the latter, that's a criminal act built entirely on a foundation of lies.
For professionals working in the financial sector, there's a sort of golden rule to remember. Not every tax-efficient structure is suspicious, but deceptive concealment and false reporting can indicate fraud. The ultimate red flag isn't just a complex structure that saves a client some money. No, it's the fake documents. It's the cover-up. That is what really points to a wider financial crime risk.
All right, let's jump into Section 3, the money laundering link, fueling the illicit finance ecosystem. This is where things get really interesting. Tax crimes are major predicate offenses for global money laundering. Now, if you aren't familiar, in the financial crime environment, a predicate offense is basically the underlying crime that generates the dirty money in the first place. When someone successfully commits tax fraud, they're suddenly holding illicit proceeds. And to actually use that money, they have to pump it right back into the global financial system to wash it clean. And boom, that is money laundering.
This is where the architecture of deception gets truly wild. How do these fraudsters hide their tracks? Well, they spin up shell companies. They build these labyrinthian offshore structures. They use false invoicing to justify moving massive amounts of money across borders. You see, tax fraud connects directly to these broader illicit finance typologies. It is, quite literally, the fuel for the engine.
And the global community takes this threat incredibly seriously. The FAT, that's the Financial Action Task Force, the global money laundering watchdog, they have very strict standards. They actually require countries to apply the money laundering offense to all serious offenses. And they specifically single out tax crimes. This just proves that treating tax crimes as severe money laundering threats isn't just some academic theory. It is a solid, worldwide regulatory consensus.
So how do we stop it? Section 4, detecting the deception, the frontline defense.
For financial firms, this frontline defense operates a lot like an investigator's checklist. It starts with customer due diligence, or CDD, which means truly, genuinely knowing who you are doing business with. Then it moves to source of wealth reviews, asking the really tough questions about exactly how a client acquired their money. And finally, it's about ongoing, relentless suspicious activity detection.
To do this well, you literally have to train your eye to think like an investigator looking for specific red flags. We're talking about unexplained corporate structures that make zero logical sense, highly unusual transaction patterns, false commercial narratives, stories that just do not add up when you poke at them.
If value is moving rapidly without any credible economic purpose, like it's just moving for the sake of moving, that is a massive flashing warning sign that someone is trying to disguise the true origin of their wealth.
Ultimately, in anti-money laundering terms, investigators aren't just acting as glorified tax collectors. The core question isn't solely whether a few bucks in taxes were underpaid. The real focus is this: is the financial system being used to conceal proceeds? Is it being used to disguise true ownership? This is exactly why tax fraud is a core financial crime, because at the end of the day, it's about protecting the integrity of the entire global financial system.
So, I want to leave you with a pretty powerful question to think about. Whether you work in compliance, finance, or honestly, even if you just want to understand the global economy, are you just looking for unpaid taxes, or are you inadvertently letting illicit proceeds flow right through your systems? By really understanding this architecture of deception, we completely change the way we view tax fraud. Thank you so much for joining me in this explainer. Keep questioning, keep learning, and I'll catch you next time.